everyone. Today, Small Business Cash Management Series, we're talking a little bit about the future of accounts receivable. And I just here today is Kelvin. He is the owner of 2080 Financial, a professional services firm based in Alberta, and also the co-founder of Helm. And Kelvin, do you want to share with us today why you started Helm?
Yeah, for sure. So 2080 really specialized. Sorry, I needed to check to see if my mic was on or not. So hopefully you can hear me. 2080 really specializes in fractional controllership, fractional CFO work. We have had a lot of success around the fractional controllership work, specifically around helping people with budgets, forecasting, cash flow forecasting. And cash flow forecasting is such a need for all businesses. But we found it was really hard to do in spreadsheets, which is where most people default to. So it was really hard for us to help our small business clients because that's who we cater to. We don't cater to huge corporations. We cater to not mom and pop shops, but people that are in the small business range. So anywhere between $0 and $5 million, maybe slightly higher than that. It's really hard for us to give high quality cash flow forecasts to that client size in a cost-effective way. And so on spreadsheets, because they just simply take so much time, so much effort, it changes so much, from day to day. As a business owner, people would appreciate that their life changes daily. So to try to mimic that in a spreadsheet is really hard to do cost effectively. So ultimately, that's why we built Helm. We created a tool that hooks into accounting systems, pulls the data out for you, creates the forecast for you. And, I'm super happy with how the product's progress. We built a lot of new and I think exciting features, the AR piece, which we're covering today being one of them, just to help people with their day-to-day workflows and integrate, more of a system, have more of an integrated system than is probably what is occurring in most businesses today. So that's my long spiel about why we built Helm. It's self-serving and I needed a better tool.
Awesome. Thanks, Kelvin. And Ammar Maman is here today as well. He's the co-founder and COO of Quickly, the fastest way to get paid. Ammar, why do small businesses have such a hard time with short-term financing?
Hey, good morning. Thank you guys so much for having me. And thanks for the intro. With small businesses, really, there is a lack of capital. That's really why they're struggling now. Kelvin jumped into it a little bit. They're not really having the capacity when they're running a business, trying to get revenue and build out their customer base, et cetera, to go in and do that work that's required on the back end, back office to put together their financials and go and access capital with banks and whatnot. So really, I break it down into two sources: internal and external sources of financing. Internal is profit. So if you're making lots of money, hopefully you can have that available. That still has a bunch of other challenges, which is where Quickly lives. And then external, which is debt and equity. So for that, you need a financial person involved in your business to build out your financials, then go to the banks and get some sort of debt financing or equity financing if you're putting in your own money or you have external investors. So these small businesses are struggling, with having short-term financing because they're usually missing one or both of those components. They're either growing or potentially in distress or in some other one way or another. They're kind of running into this crunch of capital. That's kind of the overview of the issue. And then there's a lot more details that kind of go into it and what they're doing. Sorry, Laura, I think you're on mute there.
Thanks. Thanks, Ammar. Before we get into the details of sort of how Quickly is solving that problem, how about you, Kelvin? What are some problems you see? Any additional problems you see small businesses face?
No, I think Ammar touched on them in a really great way. People meaning small businesses have a lot of challenges they faced all the time. I always look at it in terms of, business cycle. You could be growing, you could be stable, you could be declining. Every one of those phases in the business cycle, you're going to have more unique challenges, but ultimately speaking, cash flow is still a core problem. It's statistics out there would tell you it's what keeps 80% of all small business owners up at night. Like it's a major issue. So whether you're a growing business and you're continually investing your profits, as Ammar alluded to, into the business and the people, you now have a cash flow problem potentially because you have no other money to increase equipment or buy software or invest in other stuff. If you're a declining company, you have the exact opposite problem where you need to conserve cash or figure out how to cut costs or reduce, but you still have a cash flow problem. And again, in each of these cases, it might be hard for people to access external capital because if you're in the declining phase, a bank might not actually want to talk to you. If you're in the growth phase, you're probably so new that the bank also probably doesn't want to talk to you. So really, most cash flow issues are not for stable companies. But even there, that's actually the place that I love to live because those people also have cash flow issues in terms of what do I do with all the money I'm making? Hopefully. So that also is an issue. So, I mean, across the board, cash flow is an issue. And I think Ammar touched on it succinctly, which is it's internal and external. And if you are sucking up all your internal resources, it actually might be harder for you to get external resources, which I think is why great tools like Quickly exist, right? Like you can access other avenues in other ways, and it just provides options to people, which is great.
For sure. Yeah. Go ahead, Ammar.
I was gonna say that's a good point. It's it's not just the 2 to 3 person company that's facing this. I mean, there is 50 to 100 million a year revenue companies that have run into the same crunch, and really it comes from payment terms, right? And what you can kind of do with that. You're going in, let's say you have a 20% margin on what you're doing. You're still having to come up with that 80% upfront. Payrolls every 2 weeks. And whatever your cost of goods are there, and then you're potentially waiting up to 60, 90, 120 plus days to collect that capital. So naturally it just creates this timing gap, and to plug that gap, this is where banks have lived in the past. And the way Kelvin alluded, there's inefficiencies there is a lot of roadblocks there particularly if you're small or growing. And so, this is why this is a major problem globally. And this is why Helm and Quickly exist.
And I think you touched on it great there, like timing and speed is a huge issue, right? A core piece out of all of this is, maybe a bank will look at my business, but will they look at it in time? Because if you go to a traditional lender, it could take months in order to access capital, which unfortunately for a lot of small businesses could be, they didn't get there quick enough. And so getting access more quickly is also a key point. Sorry, I interjected there.
That's our name, Quickly, right? So I can jump into a little bit more before we actually talk about Quickly. I can kind of run through with my past experience, which was primarily in the energy services space in accounting and finance. And I can kind of run through these slides if that's okay with you guys. So really the main thing that we did, and even as a large corporation, before you're going into the sale, what are the things that you need to look at as a company, even as a small business? And small businesses, is scary how few actually do that. Do a credit check, right? Yes, you may be excited to get the sale, but put that excitement aside for a moment and just take a look at the business you're working with. Are they creditworthy or not? Are they going to be able to pay you back? Or is this one of those, they're going to leverage you to get something and then just not pay you, or maybe go defunct or something like that? So there's a few notes there, about how you would go about that process. And then the second thing is learn their billing process. So where are they expecting it? Is it AP@whatever.com? Do they have an invoicing portal? How do you build them? What are the contractual rates? Essentially, if you do all this work, it's like going to the gym, right? It's you have to put in the work in order to get the results. So put in the work ahead of time to say, how do I build them? Make sure that everything is per the contract. If there's extras, how are they being dealt with, etc. So credit check to make sure they're actually worth giving credit to, and then knowing that billing process, very important before the sale, before you get excited about going to do the job and collecting that money. The next slide is kind of during or when you've done the work. If you guys could advance to the next slide. Okay, so yeah, invoice fast and accurately. This is something that we did at the last company I was at, Step Energy Services. We found, we were doing these large 30-day long jobs, and then it would take us another 2 weeks to get a bill out after internally going through getting everything in a row. And then we just worked on finding technological solutions to expedite that. So really the short story there is invoice as fast as possible. The job is done, and our billing guidelines are X. Get the bill out the sooner it's in their hands, because if the customer starts dating the invoice from the day they receive it, not from the day you have on the bill. So if I have June 1st on the bill, that's not helping if I just send it to them today, because they're going to age it 30 days or 60 days from June 15th, not from June 1st, what it says on the bill. So that's just a common practice. I'm not saying it's great, but that's just usually how corporations work. So fast and accurate billing is really a big key there. The other piece that I have there is asking for pre-approval. Get your sales team involved, and they just reach out to their customer. Hey, we're about to send you the bill. Take a look. Here's a draft. Do you see any issues? If that approver or the person that the purchaser is good with it, the chances of you actually getting that through their system or whatever their process is faster is the most efficient way. So that's something that we've used in the past in the prior companies I was at, and it worked really well, because it just went in the system, got approved, got paid as quick as possible. Really, all we're trying to do here is cut that DSO down as much as possible. And then the final component to this is after the sale, right? So this is where a lot of people live today, which is I've sent the invoice and everything's done. I'm going to do a follow-up. I'm not saying stop that if you've done all the steps before. You still have to do that. Following up with the client, following up with the purchaser. You have an internal champion on that side who is your buyer. Following up with them to say, hey, is everything okay? Everything's going good. Bills were approved, etc. And then the second piece is learning their payment behavior. So, some company could pay on the third Thursday of each month, or second Friday of every 2 weeks. So every company will have some sort of a payment cycle that's better to learn. And then I'm just going to do a shout out for Helm here, right? So when they're connected in with your ERP, they'll actually be able to automate that piece, so you can you can learn that automatically as you're going. When do you expect these payments to come in from these customers? So yeah, those are just my notes around really briefly on how we took a company with 78-day payment terms down to around 50. So that 20 days is in that scale is millions of dollars that we were saving. Yeah, those are just my kind of tips and tricks on how to work this process with and without technology.
Awesome, thank you. And we're just going to move on to, oops, we're going ahead here. I'll take over sharing my screen now.
Sounds good.
This came back from a search.
Oops. Okay. So is everybody seeing Helm?
Yes.
Awesome, good. Yeah. So we, you covered off some of the best practices for making sure that, you're going to get paid on time, and even ways to get paid faster, which is awesome. And, Kelvin, you kind of alluded a little bit to, why Helm was built, which is like the ability to manage cash flow for small businesses is super difficult, because they just simply can't keep a forecast up to date. And so that's why Helm was built. And so we're going to just start out with some of the new features that Kelvin was alluded to in Helm that really kind of tackle that, so that you can actually identify and really monitor the accounts receivable process and take action on it, including maybe leveraging Quickly's ability to get early payment. So Kelvin, first of all, we have this thing called the company health score. Do you want to give us a little bit of background on what that means?
Yeah, for sure. So part of managing your cash is just kind of knowing where you sit. And so in my mind, it's not just as easy as knowing where your bank account is at. It's, any number of things. It could be how healthy are your receivables relative to your payables? What does your cash flow trend look like? It could be any number of things. And so we've boiled it down to a health score. And red is obviously not good. Green is good, and the orange is somewhere in between. And so for us, it's just a high level metric to say, as a business, are you doing okay? It's quite literally the health score, right? Like the cash flow pulse of your business. We just wanted a boiled down simple metric. So that's what that number is, which you're probably going to ask me what the health score is then. So I might as well just roll into that. And essentially we take the health score from those metrics below. So people can see Laura's highlighting them, the cash available, net receivables. There's the 6 metrics in a scorecard. And so that is what the health score is based off of. It's based off of each of those individual items. So we've just taken 6 metrics that are cash based. So it has nothing to do with like your return on investment or other financial metrics. These are all cash based metrics. So as an example here, cash available, it's got a red X beside it. And so essentially what it's saying is that your cash relative to your payables it's not good. It's not high enough. So there, you could come down to a pain point in the future, which Laura's showing you here, is that you're going to have to pay these bills at some point. And it's showing up on this graph, which is come July, you're going to be running into a cash crunch. So even though you have your money in your bank account now, you might not in the future because you got bills to pay. And so this is why Helm really exists, is to give people the future looking optics to not get hit by a bus, for lack of a better term. You know, you're trying to get hit across the street, you look the wrong way, boom, you get hit by a bus. That's what these scorecard metrics and the health score are really truly trying to give people. Because again, small business owners don't have enough money to build out a massive finance team with CPAs, CFAs, professional bookkeepers, and this, that, the other. So Helm is a tool that helps surface that information for them so they don't have to.
Thanks, Kelvin. And so getting into some of the things that you can do in Helm as well, like so a lot of the routine accounting work has been simplified with some of the tools that are available. So we have the open forecast, which is really, you know, getting into drilling down into forecasting so that you're putting in the things that are not necessarily historical, but you know they're coming. So you can go ahead and make edits to your forecast out up to 12 months out. Managing payables is really timing of when you're going to pay bills and making sure that all your bills are in place so that, you know, like source documents that are missing or bill, you don't have sort of a breakthrough in the pay run because you were missing a bill to pay. And manage receivables, which is what we're here for today. And so I'm just going to go ahead and open up the manage receivables here. And yeah, Kelvin, tell us a little bit about what this tool is.
Yeah, for sure. So again, Helm is a cash flow management tool. So we're not just cash flow forecasting. I mean, cash flow forecasting and planning is a key piece of it. But as Ammar alluded to, on the AR side, you know, even if you go through all the checks that he had on his slides there, ultimately you still need somebody to follow up with where your AR is at. Because if you're not doing that, things fall through the cracks, you know, you don't get paid, which is obviously not a good thing. So quite often you'll see in small businesses, there's either the small business owner themselves or an AR clerk or somebody managing the AR follow-up. And so what this is here is the AR follow-up that most people either have in their heads or on a notepad somewhere, or maybe on a spreadsheet if you're lucky. And what we're trying to do here is mimic the notepad, for lack of a better term. But the nice thing is that usually when you've got a notepad, you call, say, City Limousines, and you know, you find out that something not good is happening. They don't actually like the invoicing that you did. And so you typically would write these down, or the AR clerk or whoever would write down notes and say, this is where City Limousines is at. Then somebody would have to actually take that information, talk to somebody, update a forecast, and then you would actually have your forecast. So the nice thing about this is it's a simplified, but also integrated version of that notepad. So you could say, City Limousines is not going to pay us. They've got a problem. They don't like us, so they're not going to pay us. So we're going to hide these items. Typically, that would be on a notepad, and you'd have to update the forecast. But you can see here, Laura just clicked the buttons. The graph at the top automatically updated, and you can see immediately the impact of City Limousine not paying us on our future cash position. So it was already not good before, but it's even worse now. And that's kind of the point, is through simplified integrated systems, you have much more visibility. And there's obviously more to the tool than that. Like if you've got, you know, you can generate the report. So ultimately you can produce a report for managers or owners or this, that, the other. But at a high level, that's why this particular tool was built out. And quite honestly, I actually really quite like it, because it's mimicking what people are doing now and trying to automate it and integrate it with a wholesome cash management system tool.
Thanks, Kelvin. And, you know, a couple of points here too is, you know, Helm provides an expected date, and that expected date is a smart expected date. It's not just this is the invoice due date. It's actually if a customer has on average paid with in 31 days, the expected date is 31 days after the invoice date, as Ammar alluded to in terms of the invoice date. And how long it takes people to pay. So it's a bit smart. And, you know, right here, right off the bat, we expected it on May 5th, it's June 15th, and something has gone wrong. So in this case, it's past due, which is also good information to know. But, you know, what I want to do is tackle this cash flow issue. So we're going, you know, like we know that in July, we're going to go, there's not enough money in the bank. Couple ways to tackle it, but we're going to use the quickly example for this one. So what I know is that there's going to be some future invoices. Maybe there's some future invoices that I might be able to get money sooner from. So I'm going to look for invoices up to August 31st. And you can see that, you know, up to August 31st, we're suddenly going to be back in a nice cash situation. So I'm going to go forward and look at all of these, and I'm going to take a look at the one here that, you know, looks pretty good. This one here, $6,300. It's a lot of money. I'm going to actually refer it to collections, or let's pretend that this is actually referred to advance payment. And instead of receiving it on August the 15th, I'm going to receive it, you know, I've talked to the client and they've agreed to early payment terms of some kind, or in this case, I've applied this actual invoice to a quickly early payment. And when I do that, what I want to do, when I do that, what we see is my cash balance is no longer in the danger zone here, and I can go ahead and generate a report.
And I think that's a good thing to point out on the tool is it's got immediate feedback in terms of if I do X, Y, Z, you see instantaneously how that impacts not just your cash position today, but your future cash position. You know, I constantly talk to clients that's like, I forgot about that. And that's the point of Helm, is it's help capturing as much data as possible so that you don't have to remember things.
Mm-hmm.
What's amazing about this as well is that, you know, when we're going in front of our clients, we're actually selling this as a, you know, as the concept, say, look, like this is the benefit of you having that cash now. And you guys are actually just like visualizing exactly what that is. So this is amazing that you can see, okay, you know what, this is the impact it's going to have in your business. Instead of being at 0 in July, you're actually in that kind of that health mode, or your health mode is there, a minimum cash balance is there that allows you to be comfortable in your business.
That's why I love the partnership between us, right? Because with our tool, we can show, literally, I can show a client, if you go to Quickly and you collect quickly, literally on these 10 or 20 invoices, this is what your life is going to look like. And that it gives you a little more added context with the visual nature and the hard data than it just does subjectively saying, hey, you should go talk to Quickly and do this and you'll have more money. It really makes it more concrete. And I always say bookkeeping, finances, anything to do with accounting is far more emotional than people give it credit for, especially when you're tight on cash. And you know, to me, I think that's what's really exciting is you can go through, do this, show people, and then actually do it quickly. It's a great name. Like so easy to
Thank you.
So this is a sample of the report that, you know, would be generated, and there's also an option to share it with your client, and you can just, you know, say, hey, this is, you know, my recommendation, and the client can have a look at, you know, what the cash situation is and either approve it or not. So I'm gonna Trent, if you don't mind, I'll stop sharing, and if you could pop us back to our deck, that would be awesome. And so, yeah, Ammar, how about sharing a little bit about how Quickly would work after we generate this amazing plan that gets this client out of the red?
Yeah, sounds good. So yeah, you know, the having that visibility to what your cash flow is going to do is phenomenal. Kind of once you see the need that, okay, we need some sort of a solution for cash flow, this is where it quickly comes in. We call it earned revenue access because it's truly earned revenue that you have, as you saw on August 31st, that $7,000 or whatever was supposed to come in. This is where quickly steps in and says, okay, let's accelerate that cash and give it to you today. So yeah, that's what we're doing. If we could go to the next slide. Essentially, getting your cash flow and receiving payment for invoices the moment they're approved. So, the benefits we can go over, increasing your cash flow, as you can see, one, the number one thing is maintaining that health. And then two is, what can you do with it further? Can you invest it in your business? Can you take on that bigger job that was coming up, but you couldn't because of the cash flow issues? Reducing invoice chase. So our platform will essentially help you with a lot of those aspects. So Helm will help you track it. Quickly will help you actually, because you've gotten paid already, you're not going after that customer. That's quickly is kind of where we're getting that payment from that customer at the end. And overall, your business is going to grow if you have that capital available to you. Next slide, please. So yeah, our platform is fairly simple. You add, upload, create, or connect to your ERP, your invoice. It gets sent off to your client just via email or whatever their preferred method is. And your client can approve it, decline it, or request revisions. And the moment it's approved, we can have you paid early. There is a discount. That's how we generate our revenue. It would be a discount to the invoice. And then your customer would essentially pay that invoice when it's time, when it's due, and quickly would retain our whatever money that we've paid out to you originally, plus our fees. So that's kind of the app in a nutshell. I don't have a demo prepared today, but happy to walk anybody through our solution if they so choose.
Mm-hmm. Yeah, and so how do people sign up for your solution then if they want to try it?
Yeah, so they can just go on our website, helloquickly.com, and sign up for an account. It doesn't cost you anything. It'll ask you some business and KYC information to get in, and you can essentially start sending invoices to your customer. There is no requirement to request an early payment. You can just use it, get invoices out to your customers. And the idea is, in partnership with Helm here, it's when you can onboard today because you're going to help yourself in the future, because in July, when you need that cash flow and you have that invoice, then you're not going through an onboarding and we do a credit review. So you're not going through that process at that stage. You're doing it at onboarding. And then in July, when you need it, it's instant. Invoice is sent, it's approved, and you're getting the capital right away. It takes maybe 60 seconds to sign up and get onto our app, as long as you have your business information handy. And then, yeah, you're pretty much off to the races.
Great. Okay. And so now let's just open it up to people questions or, even comments, or even, best practices that people themselves have used for AR.
Jamie shot me an email and let me know that chat might have been disabled, so I actually just enabled it.
Oh, thank you. Yeah. Well.
I was wondering why she didn't say hi.
Thanks. Hey, Jamie. Okay. So, one of the, there are more, what are some of the common reasons that people might want an advance, Ammar?
Yeah, that's a great question. I mean, we've kind of talked about the cash flow gaps that companies are facing. If we back up a little bit, I'm just going to talk a little bit more about what Kelvin was saying. I think the number, don't quote me on the stat, but it's like over, I think it's over 90% of businesses in Canada alone are considered SMB. So the majority of these businesses are in that SMB space. 25%, this stat I do know from CRA website, are actually 1 to 4 employees. So if we think about a 1 to 4 employee company, there's a very low likelihood that there is like a CPA or an accountant that's sitting there. It's either an owner, some potential workers, et cetera, that they're doing. So these are the kind of businesses that are out there. And then they're usually outsourcing at year end or at tax time their financials to whoever are using fractional services like Kelvin's providing. So with these organizations, they're not taking, or they don't have the capacity to do cash flow forecasting, to manage what's happening on a day-to-day basis. They're essentially waking up every morning going, okay, I'm hoping this person's paying me today. Oh, I have bills today. And it's kind of just a mad scramble that's happening to manage the business. Now, I'm saying that not to say that they're not successful. I mean, some of these businesses, actually, these are the backbone of Canadian commerce, essentially. These are successful businesses, growing, profitable, strong businesses. The issue just becomes with working capital. So why do they need it? There's, we talked about kind of three areas that we had, which is one is distress. So that's a tricky one because if you're actually in distress, it means that there isn't profitability really at the end of the day. But aside from that issue, there's growth. So in order to grow, take on new work, add more employees, add more equipment, assets, whatever, that's really where the working capital challenge comes in. In the tech world, or in startup land, I guess we can call it, what you do is you go and get venture capital. Well, that's not necessarily the case for, let's say a cementing business or, framing business and construction. There's not a lot of people seeding small construction contractors. So for them getting that capital, they have to look at the options that they have. And so sorry, to address your question, their needs comes from a place of growth. I have to hit payroll. Plus, I want to bring on 2 new, tradespeople to work on the next job because I just got this great contract with this large company. So it's truly a growth problem. Distress all causes it, but it's truly a growth problem that quickly looks to solve, which is, hey, we will help you out. It's a short-term thing, right? You're not, hopefully you're kind of using it as a short-term thing, building up enough of a book so that your timing, which once again, Helm can help you figure out, is that your timing becomes normalized and you can actually keep an eye on it that way. So that would be the main thing. And then I think, seasonality is another component that you guys talk about, is that, hey, I'll use the energy services space as an example. Spring breakup is a common thing that happens where, when it starts to get rainy and the roads get too difficult, work just slows right down. So all of a sudden you're not generating revenue. So you're not actually going to have as many collections coming in. And, unless you lay off half your team, which, oil and gas is known to do, you're going to run into a working capital problem. So depending on the size of your business, you're going to end up needing some sort of external financing. And as Kelvin mentioned, how long have you been in business? Are you profitable? This is where the banks kind of do their weeding out, where quickly steps into solutions to say, who are you working for? Okay, you're working for CNRL, let's say, as an example, and a local example here in Calgary. Okay, they're a really creditworthy organization. We can actually pay your invoices early because of their creditworthiness. So that's kind of the way I would explain that whole situation.
And I think seasonality is a good one to touch on too, right? Because there's more than just the economic cost of it. Like, I'm being a finance person, highly in tune with the economic cost. But again, like, we work with a ton of energy service companies. So using that example and extending on it, if you run into breakup, activity's down, your sales drop, you could fire your staff essentially. But now you're starting to run into a human capital problem as well, because if you continually do that year over year, those people aren't going to start coming back. And so there's other consequences of not being properly funded outside of just the sheer economic cost. So then when things ramp back up post breakup, I've seen it, you can run into situations where you can't get those people back. And so really having a solution around that funding is more key than just the numbers would say. In my opinion, I just wanted to throw that out there.
No, that's a really great point. I mean, what we see in those situations coming out of that seasonally low period is a competition for talent. And then naturally what that ends up meaning is inflation in wages.
Yes.
So if people around the world wonder why 18-year-olds can go to the oil field and make 150K a year, that's the reason why, is because as soon as July hits and the road we do road bans and stuff, so as soon as the road bans are off, all of a sudden it's it's like the Indy 500. Everybody's running out to get as many jobs done as possible, and you get this inflation. I'm actually going to add a little bit more here. So one of Quickly's approaches is actually we go after the buying organization, and we work with both sides, but we actually go to buyers, so the larger companies that probably have working capital facilities and all this in place, to say, help your vendors. Especially in this day and age where talent and contractors and vendors are hard to find and lock down because they're so busy. Who are they going to want to work for? Somebody who they can expect to be paid from immediately, or have an option to be paid from immediately, or somebody that's going to take 90 days to pay them. And that's a big factor that's going into a lot of decisions on who do you go work for. Well, I can tell you right now, I would rather work for somebody who I know will either pay me right away, or I have an option to take it an early pay and control my own destiny, instead of just being at the whim of their kind of AP and cash management cycle.
Yeah, for sure.
You're getting into a rabbit hole there, which I always like to talk about. Like, to me, term is a dated concept, in today's day and age where technology is starting to change, and, we're not instantaneous in real time yet, but we're progressing towards that. And term was really started because, quote unquote, the check was in the mail, right? And you needed to be able to give your invoice and pay your bill and actually take time to receive it without being offside. And so I find it interesting how the dynamics changed a bit in terms of people are now using it to optimize their financial function, which usually means it's the bigger players hammering down on the smaller players because they've got the professionals that think that way, versus a small business owners. They're just feeling crushed because, they're getting these great contracts with huge companies, multinationals, guaranteed money, but that money is not coming to them immediately. It's coming to them in 90, I've seen upwards of 180 days, sometimes with some of the multinational companies, simply because they know we're GE, we can do whatever we want. You will still work for us because
GE doesn't have high inventory carrying costs because they make all of their suppliers carry the inventory instead.
They use their customers as banks, as the bank.
Yeah.
Yeah.
Awesome.
And
he's now going to come after me and bomb my house or something weird.
Yeah. So we just have a few more minutes to go. Are there any other questions? Okay. And Trent, is there a page where people can, thank you so much. So for Helm, thank you for attending today, and definitely, like, with the changes that Kelvin and I have talked about today, we really definitely want to have as many people using Helm as possible. And we really want to hear what you think about the changes we have and help us make it even better. And so we do have a promotion where we're offering 80% off Helm for a full year. So just use the code HELM80. It is uppercase H and then ELM are lowercase and then 80. And this would be for the first subscription is $9.99, and then we also have a discounted rate, so it prorates for all of each additional seat. And this is open for people who are existing Helm customers and new Helm customers. So if you have any trouble getting set up, just reach out and let us know. And I think, Ammar, you also have a special promotion for our audience.
It's quite
today.
the day. Woohoo!
Yeah.
Bonus.
Yeah, I think we do. It might be on the next slide. So yeah, if anyone as a part of the webinar signs up, we'll put a $200 early payment credit on your account. So essentially you'd get a $200 more of your invoice than you normally would if you guys sign up for it today.
Yeah. And just to clarify, we were talking a lot about examples of Canadian operations because that's what we're familiar with, but Quickly and Helm work are global, really. You are able to, you have customers that are in US, UK, Europe.
Yeah, that's correct. Yeah, we, this issue isn't localized to Canada, it's global. And with technology the way it is, we're not restricted to Canada or the USA either. So yeah, we can work anywhere on the planet. So if you're somewhere else on the globe, just reach out and we'll get you set up.
Okay. Well, I think that unless there's any other questions, that's thank you. Jordan, I think we answered your question. So not Canada only, for sure.
Great.
And awesome. Okay. Well, thank you everyone for joining us today. It's been a pleasure, and we hope to see you using Helm quickly.
Yeah, thanks everybody.
Thank you very much.